On today's episode of the Cryptoverse, a flash rally in the crypto markets sparked by a Tether scare which pushed Bitcoin's price way out of whack on Bitfinex and caused a kind of domino effect on the rest of the markets. So remember, if you want to earn crypto rewards for watching the show, head over to thecryptoverse.show, click on this big blue button that says get paid to watch and find out more. There's a little trailer that explains how that works. So let's get into it. Let's do the chart of the day. That's the only thing I want to talk about today because it's probably what everyone's attention is on right now. So basically, let's go over to TradingView. In a 2-hour period, let's move over to the 1 hour chart rather. In a 2-hour period here, see, starting at 6 a.m. London time, Bitcoin rallied against the dollar on Bitfinex way down here around 6,400 to around 7,800 right up here, which is a jump of about 22%. If I measure it here with the measuring tool, it's near enough about a 22% gain in those 2 hours, and then lots of volatility since then. Now, there is a contrast though. If we go look at the very same chart on Bitstamp, USD Bitcoin, this is the same chart. It has a similar pattern, but it's not as wild, as you can see. So let's have a look here. In this case, it rallied from around 6,200 all the way up to 6,750. And if we measure that with the measuring tool, of course, then we get to around an 8.5% gain on Bitstamp. So what's going on here, I thought? It may have something to do with the fact that when I wrote my notes for this, Tether was 3.5% off its peg, off its dollar peg, and it was down at 96.5 cents. So let's look at it again now. Now we're actually talking to each other. So, oh dear, it's still way down here at 96.5 cents. Not good, not good. So, to my mind, this is what it would look like if the market were losing confidence in Tether. You would dump your Tether and exchange it for Bitcoin in preference for Bitcoin being more stable and more likely to retain its value. It's a sad indictment. Actually, if we look at CoinMarketCap and we compare things like the other stablecoins like TrueUSD or the Gemini dollar or whatnot, let's go back to CoinMarketCap. So we know Tether's way off its peg. So if we look at TrueUSD as of right now, there you go. So the TrueUSD is trading at a massive premium, a 6% premium, because a TrueUSD, which is backed by $1 in trust, is $1.06. That's actually the polar opposite of Tether. So people are willing to pay a 6% premium on the TrueUSD, which is the market voting in confidence for the TrueUSD and a lack of confidence in Tether. We can do that experiment with another stablecoin. Let's do the same thing with the Gemini dollar. So if I put in here Gemini, the GUSD, same story. Not so much confidence in the Gemini dollar as compared to the TrueUSD, because the Gemini dollar is trading at a 4% premium at $1.04. Granted, the volume on the Gemini dollar is super low, $107,000 in the last 24 hours. The TrueUSD was like 58 million, and Tether is like off the charts, and it's billions. So Tether's 24-hour trading volume is 4.7 billion, which is a lot more than it was in the previous 24 hours. So there seems to be a bit of a run, like a bank run on Tether right now. Let's do one more. Let's do a stable coin that is stabilized by an on-chain mechanism rather than being backed by fiat deposits. So one of my favorite ones here is the DAI token. It's an Ethereum-based stablecoin. Not so good. The DAI token is trading at 98.9 cents. Let's call it 99 cents. That's actually well within the range of where it should be. So it's perfectly normal for a stable coin to fluctuate between 1 cent above $1 and 1 cent below $1. That's a perfectly reasonable spread for a stable coin maintaining its stability. So the DAI is doing its job, and this is on trading volume in the last 24 hours of $9 million of DAI. The DAI has less adoption amongst exchanges, to be honest. So it's doing its job. It's doing its job real well. So interesting to see the various stable coins. Tether because price is confidence, right? If people are buying it, that's a sign of confidence. If they're selling it, it's a sign of lack of confidence. So Tether ranks the lowest confidence stablecoin right now. Looks like the true USD is on top, followed by the Gemini dollar, and then the DAI stablecoin is right around where it should be. And if you think I'm being dramatic regarding my comment about the market potentially losing confidence in Tether, let's take a look at Tether trading against the dollar. I know that's wacky, but you can do it. You can do it on Kraken. So back to TradingView. What we can do here is go to, if I go put in USD, and then there you go, USDT against the dollar on Kraken. Look at that. If I just take away the volume for a second, because it's going to get in the way. Look at that. So Tether against the dollar, this is the purest measurement. It went all the way down to a low of 85 cents, all the way down here. Like it just fell off of a cliff. So that's 15% off of its dollar peg. That's at that point, I would say it's sufficiently lost its peg at 15% off. 3.5% you could say it was having a bad day, but 15% off, not good. CoinDesk actually quoted that price of 85 cents being an 18-month low for Tether. Wow. So this is the fundamental problem with stablecoins, right? Especially the ones that are backed by fiat deposits. Because the stablecoins that are backed by fiat deposits, they're based on trust that the fiat currency backing them is actually there, which has been the whole debacle with Tether for the last couple of years. It's just wearing me out, to be honest. Don't you get bored of it, right? So coins that are stabilized with on-chain algorithms like I keep talking about the Koala dollar, the KUSD, or the DAI stablecoin, they're preferable to me because over Tether, and the Gemini dollar and even gold-backed stablecoins, they are stabilized by the free market, right? By supply and demand in terms of the Gemini dollar, or by super smart mathematicians in the case of the DAI stablecoin and so on. So having currency minted or destroyed to create the stability automatically and via a smart contract is preferable to me because it can't be messed with, right? And there is no need for an audit because you can just audit it on the blockchain, right? You can see exactly how many are in circulation. You don't need to have all this FUD about is Tether insolvent, is Bitfinex insolvent, do they have enough dollars in their bank account? Even if they do, is it fractional reserve? Don't need any of that, right? We can get the certainty. So basically, as a result of this flash crash, Bitcoin shorts took a big right hook, falling about 24% in that 2-hour period. So back to TradingView we go. Let's look at the old Bitfinex shorts. Look at this. Fell off of a cliff in that same area period from 6 a.m. through to sort of 8 a.m. So if I measure that, yep, it's a 24.19% drop in Bitcoin short positions. That will have, some people will have lost money on that. Like a lot of short sellers will have lost money on that because the flash rally just came out of nowhere. So yeah, a few liquidations going on there in the Bitcoin shorts market. If we return to the daily chart on the BTC USD for Bitfinex though, let's just do that. Back to Bitfinex. Let's have a look at the daily chart. So pop this back on one day. This is a more interesting perspective to me. This big wick on the candle, on the head here, this shows that the previous high, which is demarcated by my horizontal dotted line here, is generally what I do. Look, you see the previous swing highs, I put a ray line, it's called, a forward projected ray line. So, because what I want to know is, as we approach the previous high, I want to know about it, right? But I don't like extending it all the way back into history because it doesn't really matter. It only matters forwards. So what we see here is that the previous high, which was about $74.30, that's $7,430 per Bitcoin, along with my green moving average, which is a 240-day moving average, which is 480-day cycles. That's why I do that. Both of those provided pretty strong resistance, right? However, it does look pretty bullish still because the market has not given back all of those gains. The body of this candle still remains pretty big. And it also remains above the 80-day moving average, which is the red line. That's bullish. That is very bullish. So yes, of course, this was an old sell-off situation. And again, on Bitstamp, similar looking candle. Also interesting that it still was inside the big wedge that we talked about. The other day we bounced off of it, and again, even this flash rally wasn't able to break above the big old wedge, with 6,000 providing the base, and then the sort of year-long downtrend line providing the slant on the wedge. So very interesting stuff there. So I don't really see any point in talking about anything else today because no one's going to be interested. I think I'll just be wasting my time. This is the only thing people are going to want to know about today, so we'll get back to the regular news tomorrow, all right? That's all I've got for you today. If you liked this episode, go ahead and hit that like button. Please leave me a comment down below and get subscribed. And if you want to earn cryptocurrency rewards for watching the Cryptoverse without ads, you can head over to thecryptoverse.show, click on this big blue button that says get paid to watch, and then there's a 2-minute video of it that explains exactly how that works. Other than that, I will be back tomorrow with the next episode of the Cryptoverse. Until then, it's me, Chris Coney, saying bye for now.